Hope everyone's all right. I just thought I'd jump on here and just give some more examples following my previous IGTVs, just to show you how we can use structure and how, again, we can identify reversal points in the market using the most recent day's price action. So we can see at the moment, it's not very clear. It's not very clear where we would enter a trade, where we would get out of a trade. But it's our job to make sure that we can mark up the charts to give us the best possible opportunity of identifying areas, again, where we can either take profit or we can look at potential positions. So I'm just going to go in here and eye up and mark out previous areas of reversal in the market. And again, we've got another one here. Right. Now, the reason I've drawn these two areas in here, we can see that these are significant reversal points. This first one here was actually a trade that I took yesterday. I think I entered at 394 actually, so it's right at the top of the wick. And I got a 1 to 10 moving this down. And then we can see here as well, we've got that, we've come in, we've had bearish momentum, we've been in a downtrend and we've been halted at this area, which is another reason why I've marked that area out. Now again, you can see it's hit this perfectly to the T. I'll just zoom in a bit more. You can see here, look, we've been halted again, bearish momentum, and then we've had a fake out of the market to try and entice people to go long. What have we done? We've run to the previous resistance and then we've melted through and smashed through that area. Now, once we've smashed through that support, we want to look at retest. We always break and retest. So you can see we've smashed through, we've retested once, twice, 3 times, 4 times, 5 times, and then the 6th time we smashed through. So this was something that I was looking at yesterday. Once we've broken through, had this bearish momentum, we've come up. There's an opportunity here for a trade. Okay, we can put the stop just above that previous high. And then if we bring it down to this area here, that would have given us a 1 to 7, nearly a 1 to 8. Now, there's a number of reasons why we would have exited at this point, which I'll also mark up because this is a significant low. Now I can see using a strategy that I've not mentioned before. It's my own personal strategy, and that there is reason to get out of the market there. I'm not going to go into that currently. I may go into it at a later date, but not at the moment. But we can see here that this is the opportunity for one trade. It even gives you a second opportunity. And this was a trade that I entered this morning. So I went short on this. And actually, let me just show you how accurate these areas can be. So you can see, look, what we've drawn on previously, we've hit it to the T. Absolutely perfect. Now, if you can get in on an entry there, then the risk reward is absolutely fantastic. And it doesn't matter if it comes back up because you'll break even by then. What you don't want to do is wait for the candle to close, then get in the trade here, then you're going to draw down, then your emotions are playing, you're back into profit, and then it just takes you out. It's just not good for your psychology. So the position I got into was here. I had my stops just above, with the previous target was the previous support, which is a 1 to 8. I moved it to break even after this large candle here. So it came back up and took me out at break even, but that's fine. That happens in the markets. Don't worry about it. Everybody takes break evens or losses. You might find some weeks you have 5 or 6 break evens. It doesn't matter. The whole purpose of trading is to try and keep your capital. You don't want to be looking at flipping accounts. If you can retain your capital, then when you do get those great trades, then you're going to increase your account balance. All right. So on the 6th occasion, let me get rid of this. Don't know why that came up. On the 6th occasion, as I said earlier, we've had 1, 2, 3, 4, 5, 6. It's smashed through. Now what's happened? We've broken through and we've retested again, which was support, term resistance, now support once more. All right. And now we're coming back up to that previous resistance. So we need to look at where market is going to react from next. And I can see on here where it's going to go. Again, that's using my own strategy, so I won't go into detail with that now. But you do have potential areas where you could get a reaction. Obviously, you see we've got one here, we've got another one in this area, and we've got a previous point that I've plotted before from different price action, which has happened a few days ago. So I just wanted to show you this and show you again examples of how we can plot areas on the chart. Because if you think, if we get rid of all of this, there's not really any definite areas on the chart where we could say, right, I'm going to enter a trade. Nothing. It's not very clear. So always go into your chart in the morning, make sure that you can mark it up properly, make sure it makes sense, and yeah, good luck in the markets. I'll do some more videos again soon. I hope this has been helpful, and everybody have a great day.